So yes, it's BG Dollars back for another video, and in today we're discussing the housing crash because look, I've got a lot to explain today. And look on your screen right now, Google Trends. Look at this. August 2007, of course, as we know, before the 2008 recession, housing crash on Google Trends peaked at 100 there. And yeah, look, as you can see, that's about Q3 2007. What happened to prices in Q3 2007? Here we are, look. Average sale price of houses sold for the United States. Bomb, we were here. And of course, as we know, bomb, throughout 2008. And even early stages of 2009, it didn't really get going again till 2010, 2011, before we started seeing it really start rising up again. So awful times when housing crash peaked on Google Trends. The following year after that, year and a half, was dreadful for the housing market. Now let's have a look where we are today, because this is a shocking comparison. Here we are, look, boom. We're up here. The highest we've ever been. Look, this was the 2008 area, look. Now we're up here, look, 4, 5, 6 times where we were in 2008 crash. And look where average sale prices are. Boom, look at that, look. We've gone up literally 40 to 50% in just 1 year. Look at this spike up. And that is far too inflated. The housing prices are way over the top at the minute. They have to come down, have to. And of course, the Fed is raising interest. And the Fed did hint, listen to this, folks. The Fed hinted in his last meeting saying, oh yes, look, new home, first-time home buyers, be careful. Cost of housing right now is extortionate. We need to bring it down. That's what the Fed's doing, price stability. And he warns them. And we've never really seen that from the Fed chair before. So Jerome Powell, that was a bold maneuver from him. But of course, these two Google Trends charts and the average housing prices aren't the only things we have going on within the housing market, is it? 30-year fixed rate mortgages for the United States, bomb. We're up to 5.78. 5.78. We're going to see 6, we're going to see 7. This is the highest in the last 5 years. If we go on a 10-year chart, it's the highest in 10 years. If we go on a max chart, look at where we are, folks. It's the highest since around 2008. The highest since around 2008. So that is just extortionate. And you can clearly see, look at the sharp rise we've had. That's when we're going to see some warning signs in the market properly. We're already seeing some early warning signs, to be fair. But that's the brink of the iceberg from what's going to happen. And I'm talking we're going to have housing down 10, 20, 30%. Maybe even 50%. Who knows? But yeah, it's not looking good. Now, in terms of sector performance, real estate is still holding up okay. In the last 5 days, look, it's down to here. So what's that? 1, 2, 3, 4, 5. It's in 6th place in the out of the sectors for the last 5 days. So it's not too bad. It's still holding up all right. But if you want to short real estate stocks, I don't recommend do it just yet, okay? I'm talking, I recommend 2023. Early 2023, we want to be shorting real estate stocks. I'm no financial advisor, so do not quote me on that, please. Yeah, because if we get it wrong, don't come try and sue me. Right, I'm dipping from that. But yeah, that's what I think. In my personal opinion, real estate shorting, early 2023, great opportunity there. Because of course, that's when we're going to start seeing prices really come down and interest rates really take effect within the economy. And that's when you're also going to have big recession fears as well. Maybe unemployment starts to tick up. And if unemployment starts to tick up, less people are going to be able to afford housing. Why? Well, because A, people aren't going to be earning money. B, banks are going to be wanting to look for stable employment, stable jobs. You're going to have less of a demand there. You've already got a big enough supply because the warning signs are here already today. There's less houses being built. People thinking, oh, look, we need to get the houses off the shelves quick because otherwise we're in the doo-doo, and that's what's going to happen. So yeah, that is just my honest opinion on the housing market. Just something else I want to quickly point out to you about the real estate crisis as well, or coming crisis. Look at this chart here. Monthly supply of new houses in the United States. Right, so this just goes to show where the supply and demand sort of issues are coming in. And look, boom, look at that, look. We're up to 9. The highest since May, June 2010. And that is very, very worrying. That shows that less houses are being bought. It shows that more houses are being on the market. It shows that there's a slowdown in sales. And that just goes to show, look when we've been high up, what's happened. Boom, housing crash. Boom, 2008, 2009. Boom, 1990s, housing crash. Boom, early 80s, look, housing crash. Again, early 80s, housing crash. Whenever we've had a spike, it's followed by a price stability in housing. Okay, it's followed by a quick little correction in housing costs, and in some cases a crash in the housing costs. Look at here, look, 70s, mid-70s, boom, straight off a cliff. And look where we are today. That's what I'm saying. There's large supply on the market. The demand isn't quite there. You've got interest rates going up. The demand isn't holding up with supply, and we're seeing the warning signs now, people. All I'm going to say is if you're looking to buy a house, I do not recommend it. I don't recommend you're a first-time house buyer. I was going to be a first-time house buyer this year. I really wanted to get a house in 2022. That was my target. That was like my New Year's resolution, to have a house by the end of the year. But when I see economic data like this, I'm thinking, hang on a second. No, that is not a wise decision at all. Let's just wait for housing prices to correct because they are far too inflated. And on that news, this is BG Dollars. Thank you so much for the recent support. Please do join me on Friday as I'm releasing my new show. It's going to be about the weekly finance. It's going to be about what things have happened in the stocks, what biggest movers, biggest losses, what we think can happen in the week ahead. I say we, it is just me doing it. But yeah, no, please do join in, and that should be a good one. And as I was saying, it's a new series. So I hope you do enjoy that one. That's a new idea from BG Dollars there. But as I said, this is BG Dollars over and out. See you in the next one.